Nigeria's inflation continued its increase, hitting 31.7% in the month of February from the 29.9% recorded in January. Meanwhile, traders at UBA say that they expect a cautious trading session today as investors await the 450 billion Naira bond auction on Monday. Chuka Nwachukwu, the head of ALM and balance sheet management at UBA, joins me now for some market updates. Thank you so much for your time today, Chuka. Let's first get your take on the numbers here we're seeing for inflation, 31.7%. We saw that a very aggressive stance from the central bank at the last monetary policy committee meeting here, and 400 basis points there. But then we're not seeing that reflect today with these numbers there. I'd like to get your thoughts on the numbers and what we can expect from the monetary policy authorities in 10 days' time.
Thank you, Ken. Good afternoon. The figures, like you already read out, we saw 31.7% from 29.9%, and if you look at the core index, you see that it's still the same. You see the same core index that has been rising, especially with the food inflation. For example, came out at 37%. Energy came out at 25%, 25.1%, and so these are the culprits. I mean, the major factors affecting the inflation figures, and it's not far-fetched. The food items is still very high, especially with the insecurity. Farmers are not really producing, not really going to farm to produce, and so we still have very few products being chased by a lot of demand, and so the prices will go up. If you look at the energy cost, for example, I mean the deregulation is also affecting prices. We really don't have unified prices anymore, so is in some instance, in the eastern part of the country, for example, you see, gas, petroleum products sell as high as 700. In Lagos, sell as far as low as 600. And so all these factors are actually what is pushing the figures up.
Okay, let's get to the markets now. Quite an interesting week it has been so far. We saw the T-bills auction there. Yes, we saw those unmet bids play out there. We're also seeing quite a lot in terms of the news flow coming to the market this week about possible Eurobond coming in the works there. I'd like you to speak to the week so far and some of your key highlights that played out.
Yeah, the week started, let me start with liquidity. The week started with the deficit of 2.5 trillion. System liquidity has been pretty tight. Yesterday, it opened around 2.2 trillion. So that has actually affected trading in both T-bills and bond market. However, on Wednesday, there was an NTB auction where 161 billion was on offer and sold. However, we saw subscription about 1.3 trillion. Yesterday, there was a bit of respite in terms of liquidity. Well over 720 billion of bond maturity came into the market yesterday, and that's kind of like eased the little pressure. So we saw, interbank rates, decrease from 35, 37 levels to around 30, 32 levels, and so that had actually affected trading in the market. And now on the T-bill side, we saw decrease in rate, especially the 1 year. It was you have about 37 basis point drop in rate from 21.49 to 21.12, and that actually has driven sentiment in the market. So we've seen bullish sentiment come in with the inflows of the bond maturity I mentioned earlier, and so we saw a bullish sentiment, in the T-bills market, especially those who are willing to, who are looking to cover some of the unmet demand at the primary auction. On the bond side, we've seen a very quiet trading. Incidentally, the bond calendar came out sometime this week, around on Tuesday, and then we saw the reissuing of 2027, and then the 2031, and then 2034. So the quietness has to do with the fact that there's a bond auction next week, Monday, and then everybody is trying to be on the safe side. The little trade we've seen on the bond side was just bearish sentiment, people trying to sell off in order to create liquidity.
But very quickly, as we wrap up now, the first quarter is about to end now, and I'd like to get what your outlook is for government bonds and even the T-bill side in terms of yields and the risk.
Yeah, so on the bond side, I think that the yield levels around 18.5. I don't think you get above 20. Also on the bill side, we've seen the yield drop about 37 basis points, like I said earlier. What the CBN is looking to do with this high yield is to attract more investors in order to bring in more FX inflow. And I do not think that it will stay for long, because it's not sustainable due to the high cost of borrowing. However, I think on the long term, we will see yield hover within this range of 20-21%. But in the long run, I will see a reversal probably in the next 3 to 4 months, when CBN probably, or government rather, has probably been able to to secure or meet their threshold, and then we see a reversal.
A lot to look for in the market this week. Thank you so much for your analysis. As always, I've been speaking to Chuka Nwachukwu. He's the head of ALM and balance sheet management at UBA.